The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Monday, the first trading day of the week, the 20th of July. Don't forget tonight let me see if I can go to it right away here. It's TFNN. Right there, Basil Chapman follows up on his popular 1920s webinar. That's tonight for subscribers. You can actually come to it. If you're not a subscriber, you can sign up for a 1-month free trial. This is a great month to be doing that because we've got a counter-trend rally going on right now, which should take us back towards the all-time highs in the Dow and the S&P. And we're just in this trading range, continuing, but there are going to be some factors here that are really important. So I'll be discussing that. Hey, let me see if I can just grab one of these charts here just to show you something of interest. So it'll be there. I don't want to get that. I do want to get this one right here. Okay, there it is. Let's see if I can get it. You see this Hollywood sign? Right there, Hollywood Land. You know, it was called Hollywood Land. It wasn't called Hollywood. Hollywood came in 1939 when they had to redo it. 1923, the sign went up. Why? Because the guy really wanted to sell property. He wanted to sell the beautiful view. Interesting, huh? And in fact, Hollywood itself is a kind of a template in many ways for economic strength and weakness, trend strength and weakness, the elision, the crossing over, the formation of a particular creation and invention that transforms and metamorphoses over time into something that has the core, the exact same thing, in other words, moving pictures. You remember there was a time when you used to, I don't know if any of you did this as a kid, you'd go to those little cinema boxes and you'd sit at a fun fair or something, and like a Viewmaster, and you'd look at it and you'd have to wind up, and they'd have just exactly like cartoons, that have the drawings that would be moving incrementally and would look like it was live, that they were moving. And you go from the fixed picture, which could create numerous overlapping pictures that give you the moving picture, and it goes all the way to film. And then what happens? Film is challenged. TV comes along. TV and film not eradicate radio, but they become a greater force. And then what happens is you go through a long period where everything's pretty much the same. Yeah, you can get Technicolor, you can get all these other things, sound and live movement that is meshed with voices and all sorts of things like that. But the core was going from the still picture to the moving picture. And then all of a sudden, you get another technological change that goes from movies to video to streaming video. Still the same initial concept. I remember seeing this, I also saw it this past weekend over at Jacob's Pillar, fabulous dance complex, complex where they have fabulous dance out there in Beckett, Massachusetts. Great program with Alonzo King. Wonderful, wonderful dancing. Almost like Olympic stars. It's awesome. And there they showed in the late 1800s going to the 1900s, the transition of the film that they had documented that was part of their archives. And I said to myself, same as I said to myself when I saw it maybe 4 years ago, 5 years ago, I said, wow, sometimes it's like you get 4 wheels and then you get a motor. And it doesn't matter afterwards whether the motorization is electric, gas, water. It doesn't matter what it is. The concept is you are moving on 4 wheels at a faster pace, way faster pace than you could run. All right? And then the evolution takes place until you get to that was the 1890s. Now you get to the 1990s. All of a sudden you get this big transition. And lo and behold, in 2015, we've got so many electric cars, but it's still the same thing. It's still an automobile. So I'm going to be discussing, just very briefly, I'm going to be going into this, this elision, this format where there's a transition in technology and what happens, and I'm going to relate it to the biotech industry. I'll be doing that tonight, 5:30 to 6:30 in a webinar. Look at the front page of TFNN. There's still time to sign up. And I'm hoping it's going to be really fascinating. I'm going to talk about, look at this. This is the Mercedes 1929, sold most recently for 7.4 million. It wasn't quite that price in 1929, but look at that magnificent car. Look at the beauty of it. Look at them, the exhaust pipes coming out. Just it's got everything. It's really beautiful. Look at this. That, I'm not going to tell you what it is. No, it's not a submarine, but it did cost 4.3 or something like that billion, not million. I said 4.3 billion. I'm going to check that because I can't believe that I saw that figure correctly. But wow, whatever it is incredible. All right. So those are the things that I'm going to try to relate to the period that we're in right now, to the period of the late 1920s. Why? Why the late 1920s? Because in the late 1920s, innovation was coming to a head in certain areas, and innovation and creativity in the automobile industry was just beginning to expand to the point where even here in Massachusetts, we had hundreds of automobile companies. And what's the relationship there? What's the relationship to, say, the communications industry? What happened in 1929 to 30 to 31? Well, in 1930, 31, you still produced not for total consumption, but they still produced unbelievably beautiful, beautiful cars. And those cars were works of art, really. But in fact, fewer and fewer people could have obviously afford it. And what happens when the body of growth, economic growth, is totally stifled through whatever medium it is? Could it be, because we've got so many so-called safeguards in place right now, could it be that we have the same type of 1930s crash, in the sense that almost everything that was done was wrong, even though the stock market went in 1932 from $40 to 937 and 38 up into the, it increased fivefold, meaning that people who bought into the market were making a fortune, and that was a real depression. That wasn't the 1992 recession, deep recession, or the 2005 deep recession. That was a real depression. So is it possible that we could even have something like that today, when you know that governments are now prepared to put trillions and trillions into saving economies? I'll try to touch on that tonight, but I'm also going to be looking at charts that I think are most important. What sectors I think are becoming highly vulnerable to any disappointment. In fact, there is no room for disappointment at all in some sectors, some stocks in certain sectors, and in others, they're just beginning the momentum that says, you know what, if there's a major decline, for us, a major decline, of course, would be anything 15% or more in the next few months. Would that be an opportunity to get into these new sectors, and what are they? So it's going to be, I think it's going to be really interesting. So let's go on. We've got the E-minis up 325. Now, I did have a Chapman Wave trend gauge reading. The last two failed. The first time, in this particular instance, from a low, that they failed. Let's see, I would go back a year or more, maybe 2 years even. So that's very interesting, but the percentage is still way up in the 90s for the accuracy of this indicator. And this indicator was suggesting that there should, off the low, or whatever the low is today in the E-minis, there should be a really good rally of between 7 and 9 points. And that should be reflected in the cash indices of the S&P and the Dow. So we'll see, and it has 2 days to kick in. So from Friday, it has 2 days. Now, let's go on. So the 120-minute chart is probably going to make a leg D, and then I think we've got to be a little bit careful as we have a little digestive phase right here. So at 21.22, 21.75 peak C, we could go to 21.23 or higher, and that'll be leg D. Then you've got to be a little bit careful. But that doesn't mean to say that we don't kick in with that sudden push to the upside. Let's get out of this and run the numbers. The Dow's up 22 at 18,108. The S&P is up 2.38 at 2129. The comp index is up 12 at 5222. I didn't talk about gold. Last night when I looked at this, in fact, I wasn't even going to, just out of the blue, I said, you know what, I've looked at everything. I just haven't looked at gold. I look at gold. And gold is down $38 or $41. I don't know what it was. It was unbelievable. It hit 1,080, the continuous contract last night. It tried to bounce, it tried to rebound, and went all the way. And this is actually a big bounce percentage-wise. It went to 1132.50. Now it's making an arch formation. And it says in this particular candle on the 120, we'll do one time frame at a time. 120-minute time frame says if the gold contract in the next, it's a 120-minute chart, in the next 5 to 8 hours, if it takes out 1,098, is trading at 1107 right now. It'll probably go and retest the low that was made last night, and it might even break that and then have a rebound. The chart that's forming right now, so far, if it has stopped right now, would be a Chapman wave Roman candle at a low, and that suggests that any close above the high, in other words, any close above 1132.50 for 2 out of 3 sessions that is above that level of the high today, if that's still the high at the close today, would suggest that you could have a really good rebound to 1142. And then all of a sudden, you know the methodology I use in the arch formation or the cup formation. It says if the bar that takes out the left side low bar, that bar, but maximum you can go one more bar, has a rebound, it has to rebound above the low to make some kind of an arch formation. In this case, the low was January the 3rd at 1187.50. It ran up, hit the 200, just missed the 200 period moving average, pulled back, breaks that low on the left side, goes to 1134.10 on the 20th of November, has a rally, can't take out the arch formation, but it does go nicely above the 9-period moving average, goes to peak C minus, pulls back, and I don't remember if I drew this in recently or last week, or if I drew it in over the weekend. I don't remember. But there's a one-to-one expansion, and that expansion says that you can go down to 1069 if you fail here. This is the bar right now in the weekly chart, starting on Monday, the first day of the week, that says by Friday or at the maximum next week, if you do not close, you being the gold contract, above 1134.10, to start a move to 1156, the 9-period moving average, you will not only go down lower, but you're going to constantly keep making these Chapman wave lowercase h or m formations. They take out the left side low bar, and that's what it looks like in the monthly chart with a target of 1,024. Bonds are down 10, 30 seconds, and the dollar is up 0.02 at 98.01. I'll be back. Basil Chapman, Tiger Technicians Hour. Hope you call in.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, and this is the Tiger Technicians Hour. Don't forget, I'll keep reminding you about my coming up webinar tonight, 5:30 to 6:30, and I'll take some questions, and I'm really looking forward to it. This is the last week, I think, was a really important week because it was that H pattern that I was looking at. I kept discussing it here on the show about that. I kept being asked about gold. When I was asked about gold, I said that H pattern looks. You need to know the Chapman Wave methodology for an H lowercase h or a lowercase m pattern, because if it takes out that left side low, it's going to be real tough, and we'll have to see how the dollar. Is there a correlation to the dollar? I think gold is in its own orbit. I think gold is part of the Reuters commodity index that keeps going to lower lows. All the commodities are being commoditized in essence. So is interest rates. Look, the TLT is down only 44 cents at 118.27. They're trying to keep those rates low. Let's go to Mike in Ormond Beach, Florida. Mike, how are you?
Good, Basil. I listen to you as often as I can, and I just wanted you to confirm where we are in the monthly chart in the Dow, which leg we're in at this time.
Okay, that's a really good question, and it's a good question to review it because I have this question all the time from subscribers and from people who are studying the Chapman Wave methodology. It seems to me that I have no choice but to go to the peak D of 16,588 at December of 2013. That's 2013. Then the low that was made in October of 15,000. Why am I doing this? 15,855. becomes a significant low, even though the candle itself was an extremely bullish candle. Why? Because there was an alternate count that said the next peak of December the 14th, a year later, which was at 18,103, should be called E/A. The next one is F/B. That was March of 2015 at 18,288. Pulls back just for one month, right onto the 9-period moving average. Pulls back this half a month so far under the 9 EMA of 17,712. And it looks to me like there's a real good chance, because in the Chapman wave, the methodology says always expect that there could be 4 peaks before you have to start taking in considering alternate wave counts. And what happened was that the way the 9-period moving average acted as a springboard, that's why I say last week you saw the Qs move to new recovery highs, not all-time highs, but recovery highs, as you were looking at oil and gold going lower. And I'm saying to myself, wow, that was an important week. Why? Because if so many charts like the QQQ in the weekly and the monthly were able to move above that F/C alternate count of the week of the 1st of May, it said to me, patterns repeat very often over and over again, and they filter into all sorts of areas. Sometimes you don't even have to have, it's a chart pattern. It's not that there's some commonality between the instruments that you're looking at. The commonality is the chart pattern. So it said to me, and that's why last week towards the end of last week, I had to say, hey, wait a minute. We're going to the upper part of the market now. We're just bouncing in this yo-yo pattern between one level and the next. And it seems to me now that with Greece basically out the way, and with the Fed already, we know what they're going to do. It seems to me that the path of least resistance would be towards the upside. So as a result, we'll be moving towards the long side many positions. And my contention is that there's enough evidence to suggest, even though the weekly chart is still technically not very good at all, there's just enough energy to squeak to a new recovery high above 18,351 in the Dow. The S&P will also make a new recovery high. And that will take, and here comes the answer to your question, a little bit roundabout, but I want you to give you my thinking as well as the pragmatic side of it. The technicals are very poor in both the monthly MACD and the stochastic. Although the stochastic's at 81%, it is way lower than it was. And that suggests that this is a move that you've got to expect price will lead the technicals, and that there's a real good chance trading at an 18,117 for 230 points to the upside this week or next. We should be able to do that, and that will get you to, and this is the answer that you're looking for, the chance to go to leg D in the monthly chart.
Okay.
And I'm going to be talking about that a lot in tonight's webinar. Why? Because once you get to leg D in any particular instrument, especially in the longer term monthly chart, that's where you've got to start saying, okay, upside can be so far. What could the reverse be on the downside? You want to hold on a second?
Sure.
Okay, we'll go a little bit more into that in a moment. We've got Mike in Ormond Beach. Dow is up 27.
Platinum,
right
grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour on this 20th day of May. And we're at 18,111 on the Dow 24. And the question that Mike in Ormond Beach had for me was, what is the wave count? And what I said is, it should go to a D above 18,351 at this particular time, even though there are a lot of, when that dark cloud cover, that is bad news, and the volatility index are now negated, what you have to say is, on the upside, what sectors and what technical tools are positive? And if there's a sudden bad news session or two, what exactly would you be looking at on the downside and why? So this is the answer to the question as far as I can see. There's a cup formation forming. I went through a really detailed analysis for my subscribers over the weekend, so I'm not going to go through all that here, other than to say there's another cup formation forming. Now, this is going to be really interesting. If the MACD in the weekly chart, which is still quite weak, it hasn't even gotten close to crossing positive. If by Thursday or so of this week, there is such a move in the Dow, 150 to 210 points, that actually gets the fast-moving average, that green line of the MACD, to even touch or preferably cross the red line, the slow-moving average, and the stochastic goes from 44% to 51-ish%, that would say we could get a right arm extension, Chapman wave, rogue wave, or right arm extension that takes the Dow above the previous high. Now I can say to you, well, two things. I'm going to say that leads me to the monthly chart, but before I get to the monthly chart, I've only looked at the upside. If in fact there's a close below 17,900, I probably should say 17,870s to really take out that, 17,920s, because you want to really take out the 9-period moving average decisively. If there's a close below that level on the weekly basis, that'll just deflect that MACD, and that'll turn into a negative pattern. So you need to see support all week. You need to see higher highs and higher lows. And the most important aspect is that this leg could shoot up to about right there, 18,550, 18,470 to maybe 18,530-ish. And that could be it. And then it could start to move to the downside. Why? Because that would get you, and the question was, is there a possibility of a stalk leg? You see, I've circled this, the Dow, which shows that there is a potential for a stalk leg to the upside. What does that mean? It means you've got a long leg. I call this whole thing a leg. One leg. It's got nothing to do with Chapman wave peaks. It's just a single leg that goes to a body like a stalk. And you know how a stalk stands on one leg? All of a sudden, you get the move to the upside. That's that long neck. And then, boom, you get the head. And the beak is when it comes right back into the body. And that would fit exactly with the scenario that I'm looking at there. We're ready for another week or two. And then all of a sudden we start to get some vulnerability. Maybe Greece, all of a sudden they find out that it's quadruple whatever everyone was expecting. That I don't know what it is. Who knows? It could be political. It could be anything. But whatever it is, you suddenly get the negativity coming in through bad news, and the volatility index, which is getting somewhat oversold on the downside, starts to rally higher. So the answer to your question, I've made a little bit of a more in-depth answer. The real quick answer is, if the Dow at 18,109 is able to get anywhere into the 18,190s in the next 2 days or so, there's just a really good chance we're going to break 18,351, and that will give you leg F/A in the weekly. My thinking is more that it'll be an F, and that coincides with a single leg A up move in the even though it could go to a B in the daily chart. It could even recycle up. It doesn't matter. But the power of this move with the Chapman wave squash in the MACD stochastic says there should be more upside. And the weekly chart, a monthly chart, will then take another leg to the upside, which will be both the neck of the stalk leg formation, because it breaks out above 18,351, and it'll be the leg D. That's what I wanted to say. Leg D. And then the technicals will still be not that great, which allows for some kind of consolidation later in the summer, early fall. Mike, any questions?
Yeah, something else, too, I heard you saying when you were interviewed on Tom's show that, correct me if I'm wrong, but I thought you said that because we've been going sideways for so long, since like the end of February, that maybe we won't get a 10% correction like you were originally anticipating, and this consolidation might be just using up time instead of price, and that might be our consolidation. And then from there, we might go to higher highs into 2016.
You know, I did a lot of work this weekend, both on my Chapman wave. I used some Fibonacci. I used a whole bunch of tools. I used Elliott wave. I did just really a lot of trying to think out the box, which is really what I love doing. And my decision is that we've used up time. Let me just show this here. This is what I show my subscribers every day. We've used up time. We haven't used up price that much. But because when I look at the different sectors, when a particular favored sector starts to decline, it invariably, because of the weighting, remember what happened with the oil stocks? When they came down sharply, they dragged the S&P, they dragged it down because the Dow had a couple of oil stocks in. And what happens is that those stocks, as they're being unwound as fund managers, and my guess right now, I'm going to try to do some work on this, is that if I look closely, I'll see that in certain very favored sectors at this particular time, fund managers are starting to lighten up. This is my thinking. I've got a little bit of evidence, but I've got much more technical evidence on the charts that says some sectors and stocks are really overbought. It says to me that everything kind of fits in, that this is not just a huge base, not the chart pattern. It would be really unusual in this chart pattern to do anything other than to break modestly higher to maybe 18,000, even 18,600 I would call a modest new high, because what you're talking about is, could this be the start of the move that really takes us into the 18,000s and higher? I mean 20,000s and higher. Is that kind of your thinking?
Yeah, well, I know you were thinking that we would go to, after a consolidation or some kind of a pullback, that we would go to higher highs into 2016.
Still my thinking, yes.
Where you thought we would make our major long-term socioeconomic high.
Correct, and that's still my thing. Nothing there has changed. What has changed is that the decline under 17,500, I found my notes the other day, big deal I made of it when I gave my first presentation on the match between the 1920s and now, was how the Dow handles 17,500 is going to be really important. And look, all the way through here, we have not broken all the way through this consolidation here. Since February, we ran up to 18,244. That was the next 18,288. March the 2nd, that was the all-time high in the Dow. And since then, we've not closed below 17,500. We did go to 17,465, which is the reason why I thought if that fails 2 out of 3 days at any point, that would be very negative. But so far it's not. What we've got is another bounce to the upside. And you can see what could happen is that we go to slightly higher low from here on every pullback, and then slightly higher highs. So no, I cannot rule that out, that we've used up a chunk of time. If you look at the Dow, the S&P is a little different. That really is maybe just a 6-month consolidation. The Dow really goes back. You can see that we were trading back in, there's that stalk leg formation. So we were at 17,350. We went to 18,100, pulled back to 17,000. So that whole area between 17,000 and 18,000, that was already going on from November. So yeah, we've used up a huge amount of time to go sideways. But because of the rotation into different sectors, my thinking is still that there could be money starting to come out of one of the very big favored sectors, going into another sector that has not been favored. In fact, it was looked upon, many of the stocks were making new yearly lows just until recently, until they spiraled to the upside. I think money is going to transfer. And also, if you want to look at it, the XLF, the financials have done very nicely. They've held very well. So that my thinking is still that we will go to a modest new high. If we go to a new high, it'll just be a little modest high. And then we've got to be careful. It doesn't mean to say that we could break 17,500, because if we go to 18,000, say 600, pulling back to 17,500 is 1,100 points. So that's still a big pullback. But I don't know yet about the downside targets in specificity. I've got ideas, but they're not, I can't, until we conclude this move to the upside, even if it's a counter trend rally, I don't know what I can use as the support levels, other than to say on the monthly basis, a close below 17,710 would be under the 9-period exponential moving average. So far this month, it's been really nice action. So I love the question. It's a great question. And the question that Dan pushed me to, I was going to talk about it tonight. I've spoken about it now. And that's the chance that you've got a rogue wave in the weekly chart. And then that gives you leg D in the monthly chart. Then we pull back quite sharply. And then we start another move to the upside later on in the year. I'm still sticking to that formula. I don't know if it's going to be right, but that's for now. Does that help you?
Yeah, it does, Basil, and I really respect your opinion. And, out of a lot of the different market technicians I listen to, you've been the most accurate. So I value your opinion.
I do appreciate that. I appreciate that because we've got a lot of accurate callers on the market, so I do appreciate that. Thank you so much.
One more thing quick. I'm in the Daytona Beach area,
Yes.
I think I sent you a couple months ago some of the socioeconomic related subjects. I don't know if you've heard, but like Daytona Speedway,
Yes.
they're undergoing a huge renovation. It's called Daytona Rising.
Oh,
And,
that's what Daytona Rising is. Oh, okay. Yeah, now, I took all that information and I said, oh, this is really good information. I forgot about the term. Yes, Daytona Rising.
Well,
That's interesting.
Yeah, I can't tell you how many millions of dollars that they're spending on this new renovation, but the but the guy who's the president of the Speedway, during an interview, and I quote, he said, "We aren't just going to have the biggest racing facility. We aim to have the biggest sports facility in the nation."
Oh, that's fantastic. Thanks for that information. Well, you know what? Sometimes things like that are fabulous conceptual ideas, but the implementation takes a long time. And you know what happens is the implementation takes such a long time that when it finally gets done, it's kind of at the top. And that's one of the reasons why you get these tops. But at the same time, if you look out maybe another 50 or 60 years, whatever the reasoning for that was really good reasoning, and it often produces fabulous results, but it's for the next generation. And I don't know, that's kind of the way my thinking is now. And I'm looking at Boston, and all I can say is that I know that it's really tough for people to buy anything here because the rents, the condos, the houses, everything is just skyrocketed. But at the same time, I'm listening right now. There's a bulldozer just up the road. They're doing a whole bunch of work. The reparations to 100-and-something-year-old houses, if that didn't get done, we would have been a slump in 10 years or 15 years' time. So this is an exciting period. I spoke about that with the New England Conservatory of Music, where I'm an alumnus, and now they've got plans. They already started they put the shovel in. They're already starting on this massive project, matching exactly what happened in 1929 when they were flush with funds, and then they built 2 extensions to Jordan Hall, the fabulous Jordan Hall, one of the greatest music halls in the world, actually, acoustically. And in 1952, they almost went bankrupt because they were down from 4,600 students to 1,200 students, and they were broke. So, and yet, look what happened when it came back in the 50s, 60s, 70s. Actually, in 1970, it almost went broke again. But these things you do structurally for the next generation. You have to do that. Otherwise, you just get run-down cities. So this is very exciting news as far as I'm concerned, but I'm just hoping it's not spelling a top of significance, that's all. But what can I say? And it's, one of the great races around the world. Everybody always recognizes that as one of the great races.
Yeah.
So we'll see what happens, but thanks for all that information. If anyone has any information like this, I get this all the time. I get people, I'm going to show something. Let me show you right now. I'll be talking about this tonight. Snag it right there. Look at this. This is in China. If I can find it right here. This is in China. And look at that building. These are buildings. Massive new super city rises around Beijing. Look at those buildings. Now, if anybody's driven past Co-op City in New York on the way when you get to the Whitestone Bridge area, that served a fantastic purpose for the time. But, it went into disrepute after a while. So this is what's needed right now. We'll see what happens in Beijing in 10, 15 years' time. Hey, thanks so much for the call, Mike. I appreciate it.
Okay, thank you, Basil, for everything you do.
Thank you.
Bye.
Thank you very much. So, folks, we'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So now looking at the 1920, where was I? Question. I had some questions during the break. I answered. Oh, the question was IBB. Where is that in the monthly? It's in leg D. Okay. Next question was I had from someone. I thought I had it. Anyway, I wanted to move on. So let me just do this. You know, the kind of market that we saw in 2000 that made the top, for anyone who was around, everywhere you went, there was something about the stock market, everything. Back in 1929, you had things happen that were so similar to that to give you an inkling, a more current inkling. So if you go back to the 1929 period, you have someone like Groucho Marx, who was really a very famous person at that particular point. So he takes all the money that he's earned and he purchases himself a, let me just read this. He buys himself a 1929 Runabout Packard convertible with a rumble seat and crimson wire wheels. Remember, I just showed you that convertible Mercedes. and membership in the exclusive Lakeville Golf Club. Anybody driven around lately and seen how many convertibles? You remember when the last Cadillac went off the line, the last Cadillac convertible? Well, I don't remember when it was. And now convertibles are back. It's interesting. He took the rest of his savings, nearly 200. Oh, and he got himself an exclusive Lakeville Golf Club. That membership, that could have been expensive. But he took the rest of his savings, nearly 250,000. I'm talking about 1929, 250,000. You can add a zero to that very easily. And invested it where? In the stock market. You know, you get caught up in the stock market, and we haven't seen very much of that in recent times. So my thinking here is that we still have to go through that phase. If there's going to be a major market turnaround, it has to come from a major upthrust. And that major upthrust, I think, is going to be worldwide. I think all the countries are going to have one. This is going to be an international type flurry of buying. And that should last 6 months, 3 months, will take you to the top. So where does it start and where does it end? I'm going to talk about the political side of this tonight. I'll give you some ideas of what I'm thinking about. Nobody knows. How can anybody know for sure? But there are a lot of signs that are saying, hey, this is, you got to get your guard up. That's not to say you shouldn't be investing. It's just to say this is a time to start being more selective. Maybe it's just a time to throw as much money as you can if we're going to go screaming to the upside. But there's going to be one surprise to the downside, and that's what you have to be careful of. Question of the din is, Basil, have you ever read much of F. Scott Fitzgerald? You know, not one of my favorite writers. And when I read The Gatsby, great. I mean, I thought, you know, maybe, you know, to take yourself in a period like this and put yourself into another time is very difficult. So for the time, I can understand it. I'll talk a little bit more about Scott Fitzgerald and there's a dichotomy that always goes along, especially with writers. They do one thing, they say one thing, and they do another. So that's something, that conflict that we have to talk about. So let me do this because we're about to wrap up. And what's today? Oh, Monday, of course. Monday we go to Daryl. We've got we've got great hosts coming up. So let me do this quickly. The Dow, INDU, and remember, go to the front page of TFNN. Check it out. You'll be able to sign up for my webinar tonight. I'm really looking forward to it. See this consolidation here in the Dow? If the Dow takes that 18,131, remember, got the Chapman wave trend gauge, which says within 2 days we should have a pretty sharp futures move that it translates into the Dow moving and the S&P moving comparably. That and the stochastic is good. So any move above 18,132, we start leg B. That's not the issue. Any move that really takes the Dow over 18,188, that's the high of the 23rd, suggests strongly that we will be trying to go to an all-time high. Any breakdown below 17,960 on the short term says, you're going to have to wait a little while, but the weekly chart is improving. And let's just do that. I'm using the Dow. I'm not even going to mention the VIX right now. It's more about where the Dow goes, and that's going to be the issue. Thanks for being here. Have a great
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.